Boom! Let's go! Never mad at the fact he's grew up like a senator, soul in a rope, but you treat it like soap in a rope, cause my beats, my lines are so dope. Booming with the funk. Yo, hey, good morning. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you can afford to lose, which is all money. Just don't lose money, especially if you don't got it. Good morning, everybody. My name is Wayne McDonald. I'm a trained economist. What else? I guess I've been trading for a while. I love trading. Trading's really cool. Love it. Love it, love it, love it. Love it, love it. Yet again, only 3-4 hours sleep. Sorry. So I'm digging deep here. But you know what? The markets are behaving. The markets are great. The markets are performing. The markets are paying. So I'm very, very happy. And in fact, the happiest hour of my day is my hour with you. So thank you for being here. Thank you for all you do to learn how to do this. Thank you for the loyalty and respect you show me every day. I appreciate that. I appreciate you. So this is me kind of leaving my comment and liking you. I like you. So anyways, thank you for being on my team. My name is Wayne. Since I've been doing this a long time, feel free to ask questions. I don't want to get on sidetracks and stuff, so don't ask me random wild questions. I particularly chase after those when I'm super tired. So let's just keep this technical today if possible. Let's look at support and resistance lines for things like euro and pound and yen and Swissy. We'll do gold and oil. And I think about that's it, right? Did I get the fixed IP? Yeah, I told the story, but I'll do it briefly. My internet sucks, as you know. So I call Comcast, and I'm like, or actually, I go to Comcast, and I go to my account, and I'm like, increase my speed. And they're like, how fast you want to go? I'm like, 150. They're all right. You're going to need new equipment. Do you want to use our equipment or do you want to buy your own? Oh, I'll use yours. Okay. We have appointments 1 week out. When would you like your appointment? Monday. At what time? 11 a.m. Great. Submit. Confirmation page comes up. Great. So a week goes by. I'm waiting for these guys to show up. They don't show up. So contact customer service, and they're like, there's no appointment. Bear in mind, this company has received the worst customer service record like 10 years in a row or something. I'm like, did I space out? Like, I'm pretty sure I had an appointment. So I went and did it again. From inside my account. Upgrade my speed. Go to 150. Yes, I'll pay for the equipment, right? Found a time, a week out. Can do it. Confirmation page. Then I contact them. So I want to make sure you're coming out, right? I have an appointment. They're like, you don't have an appointment. You're like, what? So anyways, so I actually, I got something good coming. It's supposed to arrive Monday. And let's just say I'm going institutional, not Comcast Business, not Comcast Home, Comcast like FU. So they're gonna pull in some FU internet speed. And I'm just gonna like FU YouTube, right? Here's more than you can handle, YouTube. So I got something cool coming early next week. And by the FU, that's good stuff. Like you could be rich or you can have FU money. That I won't have FU money, but I'll have FU internet speed. So anyways, it's just fun. So whatever. So yeah, so let's do some currency trading today. like I said, all the pairs. Let's just go through them, huh? Let's get her done. And I'm looking forward to next week. Boom, FU internet speed. Yeah, Claudio says, yeah, big question in the markets is, does the U.S. agree to roll back tariffs or with the trade deal? Will it impact Forex as well? Well, all of it has already been done, Claudio, right? So, but yeah, absolutely. That is the big thing. That is the thing. What? Gold. Okay, that's interesting. Set up like that. So, I don't remember doing this. I don't remember doing this, but that's pretty funny. Crazy easy sell. That's pretty funny. I haven't been on this chart in a while, right? I usually am on the other profile, but that's pretty funny. That's pretty funny. Hey, apparently it fell. That's pretty funny. So, anyways, looking at gold, right? XAU, yeah. Monthly M3, monthly central. It's just, you see how it off the pivot, through, back to the pivot, through, back to the pivot, through. Now, unless you're doing a longer term trade, you know, you probably should have got out last night, even though it went lower. If you're on that longer term trade, you need to be tiptoeing out of this now. This is the conservative projected low for gold this month. Now, if you find your lines here, so let's go to the other one. Let's go to the other one. The gold over here. Let's go to this one. Because I think we already did this. Oh my God. Yeah, I was up at 2:30 in the morning. Or actually, well, I went to bed, I should say, 2:30 in the morning. After days and days and days of not sleeping. It's getting hard, man. All right, so anyways, I'm back here. If you pick your lines, okay, this one. So I had it that way, but you can see how important that weekly pivot was. That's a pretty tight line there. What's the next line? Would you or should you consider this support based on price? Pro Trader says 1452. Huh, that's interesting. I don't really see it that I see what? Well, I mean, you're not wrong, but I don't see that. And basically, I guess what I'm saying here is if you use price or you use market, both are saying that you should probably get out now. And we're at 1457. Like, why would you, the extra $5? I'd be done. I wouldn't care. I wouldn't care. I see, I mean, everybody sees this. And then you got that. Yeah. Right? I mean, you're supposed to be short at 1520. 1514. So 1515. Now we're down here 14 and a half. You know, whether it's 1452 or 1457, I wouldn't give two hoots. Okay. Yeah, and then Barry's like, way down here is the next level, but that's a different gig. Where's my drawing tool? Because remember, we don't have opinions, right? We just analyze. And we're asking ourselves, where's the market? Where's the risk? Right? So let me, if I can get my drawing tool to pop out. Hello, drawing tool. Where is it? There, boom. Like the butcher, the baker, the candlestick maker, he's the maker, the breaker. All right, okay, good. This predicts this. That's all I know. And then I look left and I see that. and that's all I know. So I got two reasons why this is going to hold. Now to go lower to this 1444, so it's plausible, of course, but I think you're going to need like this. Like, you know, you something, right? Okay. So this is sort of, you're missing the patterns, but never mind. Yeah, well, the patterns. I mean, it's okay. I'm just doing price action, support, and resistance, right? So that's all I'm doing. So, and the reason I suppose, maybe I'm poo-pooing on a little bit, you know, like the easy money, if you were actively trading this, right, has been done. Like, it's here, right? So, to me, it's like, if you sold up there, you're pretty much done. Like, your risk now goes up exponentially, is all I'm saying. So, to get one more is okay. Obviously, that's too fat, right? To get one more, that's okay. But now you're chewing on the bones, right? That's all. So whatever your pattern you're trading is fine, and it can do that. I think you're going to have a bigger pullback first. So I think it's going to consolidate, maybe your little three-wave correction, and then, I don't know, and then, so it might do it next week. But let's look at this. Could you sell it now? No. And then when you're selling here, once again, you risk having missed the move. So this is a really late trade, right? So this was an okay trade. This was a good trade. Anything now, as far as entering south, I mean, it may fall, of course, but it's just not a very, it's too much too late kind of thing, right? That's all. Naomi says, should we prepare for a counter trend trade? No. None of this is counter trend trade. Okay. Yeah. Well, what's happening here is people want yield. Okay. And also, there's an air of confidence again right now. Of course, that will change. It always changes. But the market is just like, hey, everything's good. I don't want to be in gold. Okay. Okay? People don't want to be in gold. Okay, let's take a look at here. Let's get off the 5-minute. Why was I on the 5-minute chart last night? Anyways, cool. We're flipping around here inside the range. Okay. So do you want to be a bull or a bear? Well, if you're bearish, you kind of got this, and it's not that great. Because remember, we kind of want to be closer to these extremes, right? Standard deviation, right? So, you know, sometimes you can draw inside of this and have two channels, if you will, almost like, you know, two Bollinger Bands. Some people do that. Like, really? Yeah, well, if you use two Bollinger Bands and it falls 2 standard deviations and still doesn't find support, well, then I need to know where the 3rd standard deviation is, which is statistically only like a very, very small difference, right? Does anyone remember 2 standard deviations? I forget even how, I'm so tired, I forget even how to write standard deviation. I feel like there's a square root in there or something. 2 standard deviations, isn't that 95%? So what you're saying is you have 95% confidence or a 5%, right, rate of error. And then if you go 3 standard deviations, it goes all the way to 98. It's like, does that really? You're like, oh, well, now it'll find support. You're like, dude, there's other ways of doing it, right? But anyways, so if I were to stay a bull, okay, I would want this to start heading up. Okay. If I don't get that and bears kind of win, then if we hit this on Monday, who was it? I think Baby G. No, Naomi. Should we get prepared for a counter trend? Well, if we were down here on Monday, I would look for a counter trend. So my plan A is sort of try to kick off this, what we call a role reversal, and go up. That's my plan. That's my plan A. So I got to think about today. Oops. Am I getting in today or not getting in today? Okay. If I don't get my entry and this collapses today, then around 55.50 to maybe 55, depending on, again, price action. If this is Monday, I would look for the counter trend. So there's my plan B. So I either get it today or next week. Alex's Fibbo channels are nice. Yeah, I guess so. I like regression channels just because, I don't know, the math is clean. We're not polluting it with theory, right? It's just a statistic. So I like the fact, for example, so let's get rid of it. One of the things I like about a regression channel, is you get the tool, okay, and you don't draw it from the bottom up. You draw it from the left to the right, and it does the math. So the first thing you have to do when calculating standard deviation is calculate the mean and the slope of the mean, rise over run. And yes, I did take a class on statistics. I did this by, I did these calculations myself. So you look at the mean, the change of the mean over time as you add data, and then you look at the slope of the change of the mean. And then you look at the sort of the extremes, the extreme data points away from the mean above, and the extreme points away below the mean, and then you do calculations to figure out the standard deviation from the mean. So all I'm doing with this tool when I click this tool is I'm just saying, what should I calculate? So I'm not going left to right and drawing a trend. All I'm doing is, look, I can have my mouse up here and I can just go left to right, and it calculates the slope, rise over run. And so now it's telling me, see my mouse, it's going purely left to right. It's telling me the trend. See what I mean? So I like that. I like that. It's doing it, and it says, well, this is what the math says. It's not an opinion. When you measure starting on this candle to our current candle, that's the trend, right? And that's the expected with 95% accuracy, right? Where the highs and the lows have been currently, right? And it changes over time, which is really cool. So the more data you add, if you get more outliers, your standard deviation is going to go up. If you get less outliers and more average results, just sort of slightly above and slightly below the mean, then the standard deviation is going to narrow, and that's going to tell me, add more confidence to sort of the uptrend, right? So anyways, that's, it's not, and like I said, it's not looking at like this should be a 382 or this should be a 618. So no, it's all, it's just the math. I like it. It's just the pure math. This is it. There's the average, right? Here's the mean, and here's the standard deviation above and below. I love that. Okay? Just pure math. Okay? So when I say you should fall in love with Forex and then master things, take a university class on advanced statistics so that you can learn what the algorithms are doing and be able to make the calculations by hand. Are you willing to do that? It was a cool class. It was a cool class. Wow, I'm tired. Holy crap. Let's keep going. I gotta move. I gotta move. Give me the juice. If I said it, then I meant it. All right, cool. So what's going on here? We were range bound. We anticipated a higher high, higher low. Yeah, we kind of got it. And it took longer than we wanted. And since that time, we've been measuring the mean, the mean, and the changing mean, which gave us the rise over the run, aka slope. Right? So there's the average. When you look at all these prices, and they're going up and down and up and down and up, well, the average price and the change, which gives you the direction, the trend, right, the slope, and then how high and how low these outliers tend to be, or have, not tend to be, have been over this time. So I can look at it and say, well, I'm still a bull. Okay? So if that's the case, I have to kind of project this in the future and say, well, where in the future would I like to buy this? So there's many ways you can skin this yak. It's not quite right, but I think you get the idea. You can do it like that. What do you think? Could you disagree with this? Yeah. Yeah, you could. That's your bias. Okay. Thank you, Justin. Yeah, would you guys be so kind as to subscribe, like, and comment? Thank you. Yeah, you could, but this is just easier. I don't want to mess with it. But I know what you're saying. That, yeah, using the Ray extension. Yeah. I just more like I want you to look at this and project mentally, right? But anyways. Rod says, hey, well, how do these, extreme outliers impact things? Well, typically it will tell you that perhaps, right, perhaps things have changed. Now, one of the things you can do in statistics now is say, you can put in a rule that says if the outlier is too far away, and that your judge is whatever that is. Like, if it's beyond 95% of the standard deviation, ignore it as an extreme outlier. Right? Within 5% accuracy, or 5%, 95% confidence. Have you ever guys heard that, by the way? Like with elections and stuff. They're like, all right, we still got 20 hours before the close of polls or of voting, but we're declaring victory with this person with 95% confidence. And you're like, what? Dude, people haven't even started voting yet. Right? Like, dude, there's still tons of voters. But they're like, no. This Democrat with the 95% confidence is going to win. And then you flip channels over to Fox, and they're like, nah, there's a 95% confidence that the Republican's going to win, right? What does it mean? Well, it's not rigged. It's statistics, right? Like, you can tweak it. So you're like, yeah, if you don't count all the Democratic voters, the Republican's probably going to win. Right? But everyone does it. You know, Fox and CNN, they both do it. But what they mean by the 95% confidence level is it's within 2 standard deviations of the mean. That's all it is. That's all that means. But what if you want more accuracy kind of thing? You can tighten it, right? And only measure what you want to measure. So you get to a point where if you want 100% accuracy, you're not really predicting anything, because what does that mean? You're on the mean. And we know, like in Forex, you don't get like a straight 45-degree angle mean. You know, price has to go up and down. It's never on the average, or very rarely on the average, and it's only there for a millisecond. It's always slightly above and slightly below the mean, right? So to give that, like, look at these big moves, right? Now, what if, let's manipulate things, What if we had price action that only did this? 95% of the time, it just did this, okay? Your standard deviation is significantly lower. So one thing you could do to get that if you wanted it, right, statistically speaking, you say, well, these are outliers, and we're not going to count these. And these are outliers, we're not going to count these. Right? And you're like, wait. Right? But anyways, yeah, let's get off statistics. But anyways. So I'd rather I would rather you use Bollinger Bands in a way that is explaining volatility. That with Bollinger Bands, I want you to look at it not as what most people teach. I think most people teach like, when you're up here, you should sell. When you're up here, you should sell. Right? When you're up here, you should sell. When you're up here, you should sell. When you're down here, you should buy. When you're down here, you should buy. I don't think that's right. I don't think that's enough information. It doesn't tell you if you can have a farther outlier. And when do you have farther outliers? When it reverses and stuff like that. I mean, it might be helpful information. I want you to look at this and say, under these conditions, if I'm a bear, I should be cautious, because this is statistically speaking bullish, right? On this time frame, looking at this data currently, right, this is bullish. So if I'm a bear, I should be cautious. That's all. When you use Bollinger Bands, you kind of see this kind of stuff going. And I'd rather you look at this as a measure of volatility, not support and resistance. I don't know if you still use Bollinger Bands, but I believe people still use it as like, you know, more than I think really what it is statistically speaking. I want you to look at it and just say, oh, when they narrow, it's not very volatile at all. Not many people are trading. When they widen, so if the Bolly bands do this, then lots of people are trading in here, okay? And you can expect it to kind of do that. But anyways. Bollinger Gibran's probably too old school for you guys. All right. Gold, oil. Right on. I had probability and statistics in school. Yeah. Thing what you still doesn't get me. Gauss. All right. What should we do? What should we do? All right, let's do request. Let's do request. Let's do some. What do you want me to cover? Euro lira. Okay. You the boss. Oh yeah, right here. Okay. Would you say euro lira? Euro lira. Euro lira. Look. We're on the mean. Nothing's happened. Let's measure this statistically. La 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 la. Going back from the 25th of June. La, na, 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 na. All right, slightly is doing something. Of course, you can manipulate this if you wanted. Like, I only want to count up to here. Only want to count here. Well, it's a time frame issue. So remember fractal geometry? Like where I teach you how to line up 4-hour charts with 1-hour charts with 15-minute charts with 5-minute charts with one, right? This is kind of how this fits in. On this time frame, that there's the trend, here's that trend, add some more time, there's that trend, right? And often people say to me, well, which one's the best? Well, they're all the same. They just are. They just is. It's just, that's that. That on the, measuring from here, that's the trend, right? Well, I've been trading this from that time period. And so I see that we're just sitting on the mean. Isn't that amazing? Like the price we're on right now is statistically the mean, the average price going back to June. I wonder why it stopped moving. Okay. Huh? And let's narrow this out. So as we get closer to the 2 standard deviations from the mean, you can start to think it's too far. Okay, but I want you to add bias. I want you to add strategy and tactics. Where's the pivot? Where's the price action? Where's all this stuff? Okay. You don't just buy because it's low. Okay. So there's not a lot to do right now. How about the pivot points, the monthly pivot points? What is this telling us? It's telling us the same thing, really, if you think about it. Open, high, low, close, isn't that a form of deviation? It's a weighted standard deviation. Open, high, low, close divided by 3. Well, so low and high divided by 2 is average, mean. But then we weight the mean based on the close. So, right? So these pivots that we're looking at here, they look at the last period and they're like, where's the low? Where's the high? Where's the average? The average is, let's say, about where we are. And then let's adjust based on, the close, and it closed about 50%, right? So this pivot is really slightly just off the mean, but it is weighted. So, but it's a weighted mean. And then it does some other calculations, right? Things like there's the lowest low, there's sort of the highest high. Then we do some other calculations. What's the distance from here to here, and divide that by 2, and you get this. What's the distance between here and here? Once again, these are just means. What's the average between these two distances? Here. And it's kind of a form based on that period, but weighted, right? So it's sort of a weighted standard deviation. This is the upper part, let's say. This line here is basically this line. This line down here is basically this line. Okay? This line is basically this line. And then we add the median, right? The average between those two extremes, and you get all that, right? It's kind of neat, isn't it? What? I got someone at my door. I have to go all the way upstairs. I have a sick kid at home today. I got to go up there. We're receiving some sort of huge delivery today. I forget. Of course, they're not supposed to be here till 10. Yeah, I got it. I'm coming up. So I got to go, guys. I'm sorry. I got to go. Someone's screwing up. It's not me, it's not you, so I apologize. Have a wonderful weekend, and I'll be back Monday morning. I'll see you then. Please leave a comment, please subscribe, please like, and please be safe. May the profits be with you.